Hello, Akshay. Good morning. Now, we were just talking about the markets yesterday and today. In the last hour of trade, we saw a cut of about 100 points on Nifty. Even this morning, the markets have opened lower. What's your overall read on the market's mood? Has that, bounce that we were expecting reversed now?
Good morning to News 9 team. Firstly, on the outlook for the Nifty index, yes, what I understand from the last 3 days of bounce back, it looks more like a dead cat bounce to me. We are dealing with a very important resistance that's 19,200 to 19,250 basis spot in Nifty index. It is mighty important that these levels should sustain if we were talking of any stability in the index going ahead for the November series. Right now, as I understand, yesterday we did see some selling pressure, fresh rounds of short build-up in the derivative space in the futures and options segment, strong call writing at the strike of 19,200. So a lot of selling activity clearly visible at the space of 19,200 to 19,250. This means that we are still not out of the woods. The chances of a revisit of the immediate support, that's 19,000, considering the fact that tomorrow is the weekly expiry for Nifty, and a lot of put writing positions are placed at the 19,000 strike. So that will be the first set of support. And secondly, 18,800, which was the recent swing low, that also would come into place in case the selling pressure aggravates. Obviously, the market should be looking at how the FOMC talks span out as it starts in the evening today. So that will be one crucial event on the watch list. But broadly, the setup, irrespective of what is said in the policy or what is done, the setup is weak. And as I said clearly, from here, it is a sell on rise till we are below the 19,200, 250 mark.
All right, a sell on rise market till we are below that 19,200, 250 mark, as Akshay has pointed out. Akshay, Bank Nifty is also showing signs of weakness. We have been talking about 43,000 levels being that crucial make or break level for the, for the index. It has corrected by about 300 points or so in the last hour of trade. I think this morning it's also down about 200 points, significantly below that 43,000 levels. Is the overall trend negative? What are you viewing? What are your expectations?
Yeah, yes, Suyash, I cannot agree more. It's a double top, which is a bearish development, which I have spotted on the Bank Nifty index on the technical charts. Now, this bearish development is promising a target of around 41,500. So we are still around 1,000 to 1,500 points away, roughly, from the target area of the bearish pattern, which we have seen forming a few trading sessions back. Now, yesterday's fresh selling action at the area of 43,000, 43,200 is just an indication that the trend may resume. That's the downtrend I'm talking of. So clearly the negativity is intact for short term in the banking index. The recent swing lows of 42,000 would again come into picture. That's the support zone if one is looking at. The trend is more weaker as more than what Nifty would be in case of the bank index. So I would suggest banking is weak if you're looking for the November series. For any reversal, if we were to talk, the levels are pretty far off. That's above 44,000. So even if Bank Nifty recovers a bit tomorrow, it doesn't mean we are out of the woods. So clearly a shorting space, or at least if you have longs, you need to cover it up, not sell puts in such the way the charts are suggesting. So clearly a negative setup and stay away at least from longs is what my view would be for the bank index.
Now, Akshay, we had three major Nifty companies coming out with its results yesterday. Let's talk about Bharti Airtel first. Now, the results were pretty much in line with what the street was expecting. Although profit figure did slip by about, I think, 38 odd percent or so on a year-on-year basis. Now, this was on the back of an exceptional loss relating to, interest charges and other regulatory levies. The stock also is, down about 0.5% this morning or so. But on a year-to-date basis, it has given returns of about 12%, outperforming both Nifty and Sensex. What's your overall outlook on Bharti Airtel, sir? What are the levels that you'll be tracking?
Well, the results are out, the results are good, and the reaction post results is a pretty tepid reaction, as I understand. It's slightly down, but again, trying to regain its gains. So the support of 900 to 905 is the level which you need to note for Bharti Airtel. One is it's a very strong technical support. Second, 900 support also coincides with the put writing as far as the open interest activity goes for the November series. So clearly, 900 is the level you need to to keep a note on. Till 900 sustains, you can expect some recovery in Bharti. The overall chart texture of Bharti is still not weak. It is just in a consolidation zone, as I understand, and there are good chances that it may recover from the 900 mark. If it recovers, then the immediate target is 930 because a lot of call writing placement is seen at 930, and you may get higher targets if it sustains further above that. So right now we are keeping a close watch on how the stock would play out today, especially because today is the first reaction day post results. 900 is what it should sustain. As of now, it has. So clearly an intraday buy, as I understand right now. Stops below 900, recovery you can target 930, and in case it extends further, 960 can be your target area going ahead.
All right, that's the view on Bharti Airtel. Akshay also wanted to talk about Larsen and Toubro. L&T on a whole delivered a very healthy set of numbers, exceeding the street's expectations, on most front. But I think what stood out for me personally was that order book, which grew by about 72% on a year-on-year basis. And management also has, expects L&T to outperform their FY24 guidance on both as far as revenue is concerned and EBITDA is concerned. But the stock this morning is down about 7.5% or so. And in the last month, we have seen a fair bit of correction taking place in this stock. It's down about 5% or so, odd levels. What's the story there? Why are we seeing this, this correction in L&T playing out?
See, the stock is a bit overstretched. The technical structure is strong. It's just that the stock is overstretched on the technical parameters. Now, if you look at the overall activity from the 3100 to the slight correction which we saw till 2800, a lot of shorts were built in the month of November, as I understand, based on the derivatives outlook. Today, even after the result outlook, despite good numbers from L&T, we are not seeing any positive reaction post the results. So clearly, the market is going to take this result as more of a non-event. It looks like it's going to stay on the sideways or a range-bound trades, as I understand. The crucial support you need to mark here is the level of 2850. So till L&T trades about 2850, there is no danger to the stock. In case that breaks, then that would be a short-term sell trigger. There is no long-term panic, but a short-term trigger which might see some degree of weakness. As it currently stands, I'm seeing a range, 2850 being the lower end of the range and 3000 being the upper end of the range. The stock is expected to trade within this range and no major risks are seen as yet as far as the broader chart structure is seen in Larsen and Toubro.
All right, L&T is expected to trade in a consolidation in a range of about 150 points or so. As you were also seeing on your screen the numbers, the report card of L&T, I think the revenue is up by 44% or so. Profit figures have also, come in ahead of the street expectations, coming in at 19.3% on a year-on-year basis. EBITDA, earnings before interest, tax and depreciation, has also, improved by 15% on a year-on-year basis. So that's the view on L&T.
Akshay here. Hi, Amit here. Before we let you go, could you let us know your top 5 picks for the day, for the markets?
Yeah. Good morning, Amit. So the top 5 picks which I would recommend today, one is, the first one here is, just give me a minute. Yes, so it is Dabur which I have recommended as my first trade on the buy side. If you look at Dabur, well, it's a possible double bottom in the making, an underperformer in the last couple of months and trying to regain its lost ground. So a positive placement on the derivative space, and I probably feel that FMCG pack may stand out for the month of November. So Dabur is the front runner here. Buy Dabur at the current rates. I will keep a target of 543 with an extended target of 551. Stop loss 515 on this trade. The second trade I would recommend is from the pharma space. It is Glenmark Pharma. Again, a defensive space, but a positive chart structure supported by derivatives data. Buy Glenmark at the range of 750 to 745 with a target area of 772 to 781, stop loss 735. The third trade is from the IT space. Here it is Wipro and beaten stock, oversold parameters, possible short covering candidate, initial signs of jump from the support seen going by the last couple of days trading action. So buy Wipro, I'm expecting a recovery here in this IT stock. Target 397 to 405. Your stop loss will be 103.72. The fourth trade would be from the power space, that's power grid. 200 to 202 would be the buying area. A lot of long bets seen. Power space has been in news, has been a positive sector overall since last 3 months, and I believe this sector is going to continue to perform going ahead. Keep a target of 215 to 219 on power grid, stop loss 192. And the last trade here, the fifth trade, is from the cement pack, Ramco Cement, with an exceptional strong chart structure here, a breakout seen at the level of 950 a few trading sessions back, respecting the supports, regaining its buying from the support area. So buy Ramco Cement at 993 to 990, target 1037 to 1051 with a stop of 972.
All right, Akshay, that's the view. Your view. Dabur is a buy. Glenmark and Wipro also, a potential buy candidates at this point in time. Akshay, always a pleasure speaking to you, sir. Thank you for joining.